Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Well, here we are. It's Cyber Monday. And without sounding like a bit of a broken record, the equity uptrend continues. The equity markets continue to trend higher. And at this time, it looks like they will continue this way. And we have a lot of clients ask us how we could be so confident in that type of call. Well, one of the things we look at to gauge the market health is the breadth of the market, meaning is this market being led by a few stocks or is it very broad-based in nature? So we look at the S&P 500, that's hitting new highs. So however, if you look at the RSP, which is the Guggenheim Equal Weight S&P 500 ETF, that's also hitting new highs, meaning it's not just the big heavily market cap stocks leading the market, it's broad-based, all stocks are leading the market. We looked at S&P Mid-Cap 400 Index, that's also hitting new highs. Then we looked at S&P 600 Small Cap Index, that basically was correcting since early October and over the last 2 weeks shot up into new highs. Similarly, we can see that in the Russell 2000 Index. So also if we look at the QQQs, which is the NASDAQ 100 Index, an ETF of NASDAQ 100 stocks, those are also hitting new highs, and as is the NASDAQ Composite, so everything's in sync. Now, Dow Jones Industrials are also hitting highs, except the Dow Jones Transportation, that's one index that's just actually bouncing off support, not near as high. So that's the only slight divergence we see. Now, the measure of market breadth, also we can look at the NYSE Advanced Decline Line. That's hitting new highs, leading the market. We don't see any divergence there. We can also look at the Value Line Geometric Mean Index. That just broke out after 20-year consolidation, and it continues to hit new highs. So we can see our stock's still the place to be as when compared to other asset classes. Well, we can take a chart and look at the stock to gold ratio, and that's a positive slope, meaning stocks are outperforming gold. We can look at the stock to bond ratio, take a look at a chart at that, and that's a positive slope also, meaning stocks are outperforming bonds. So in a nutshell, you know, we went through a lot of different industry groups and sectors over the last few weeks that are performing well. Those still continue to perform well. So it is a time in the market where you should stay long. At least that's the weight of the evidence right now. And when that evidence changes, we'll change along with that too. So as always, you should always consult your financial advisor, and you should also let price and volume be your guide. This is George Kachuk, we're RCM Wealth Advisors, reporting you from the CME trading floor in Chicago. Have a great trading week.